Hello and welcome back to another video. In today's video I'm going to be sharing with you my outlook on the dollar index, 10-year US government bonds, Euro USD and GU. I'm also going to be sharing with you, how I'm going to actually incorporate the economic calendar to make a more informed trading decision this week. So first things first, let's actually review the economic calendar. We can see Monday we actually have our GU bank holiday. Is alongside our 3 p.m. USD driver. Now, what does this mean, okay? This means more likely than not, okay, for our GU and Euro, on the Monday, we are going to potentially see, the completion of this framework of price actually, reaching, mitigating this weekly fair value gap. Same thing with Euro USD, anticipating this framework to actually be completed. So on the Monday, just because this is predictable, that okay, this is going to be draw of liquidity, does not mean it's going to be probable to take advantage of. Hence, our 3 p.m. driver on a Monday and GU bank holiday, it's going to be low probability trading, conditions, especially down to the overall significance of our NF driver in the previous week. We may just see some sort of continuation to the downside, complete this framework. Low probability trading conditions to actually take advantage of until we actually reach our weekly fair value gap. Okay. Now, very similar with the dollar index. Okay, I'm not going to go into the analysis too much yet on USD and GU. But what I'm actually anticipating, let's start off 10-year US bonds, is higher prices. Now, as you can see, okay, in our previous week, we saw this retracement, balancing and restoring equilibrium market, trading in our discount on our range here. Meaning more likely than not, in lifetimes as of now, we are going to see some sort of higher prices, okay, potentially making a run for this high here, and then from here, okay, we'll assess our market participants trade, potentially making a run for this high up here. Some of our previous monthly high levels, you see where our current monthly candle is actually poised, and how our previous candle actually traded, showing clear intent that more likely than not, as of now, going into our next month's candle, we are going to see bullish prices. So, moving and actually adapting this onto the dollar index, okay. So, as mentioned, okay, had this completion of this AMD framework, market participants chosen to trade prices below our previous yearly low. Then, as of now, in our previous week, this is where we've started to see this retracement actually come into fruition. And, as of now, this point here has acted as our reversal in price. So, my overall objective for dollar index, okay, so the short-term objective is going to be this gap here, being our daily fair value gap. Okay, now very, very similar on GU. Okay, I'm actually anticipating us to dig deeper into this bullish, inefficient leg of price action. Okay, so as mentioned, on the Monday or potentially early Tuesday, we're going to see a run of this low, and then from here, okay, all we'll be doing, okay, is just assessing how and where market participants choose to engineer liquidity on what side of the market. Are significant news drivers actually coming into play on the Wednesday when we actually get our FOMC release. Okay, so Tuesday, okay, it may offer a predictable and high probability intraday setup. Okay, continuing or going in the opposing direction, some sort of intraday manipulation from our previous daily candle on the Monday. Or, as mentioned, yes, it could be continuation of our prices, and we may even look to, target our previous weekly lows, etc. quite simply engineer this low. Then on the Tuesday we get some manipulation on, and then make a this, making it high probable and predictable intraday trade to, you know, our weekly fair value gap. This aligns nicely as well with tomorrow obviously being bank holiday. Moving on to the latter half of the week, post our significant news drivers actually coming there, I'll be actually anticipating one of two scenarios. Okay, so firstly, first scenario is that on the dollar index, I'd actually be looking for this objective to be met, and from here, okay, we're either going to see some sort of consolidation, and this push up here, you see our engineered lows, adding to our sell side liquidity here, and then from here, then we'll see manipulation in the opposing direction of this engineered liquidity lows, potentially to the upside, and then we see our framework present itself, and then we see the expansion of our daily candles in the latter half of and close bearish for our weekly candle, potentially even making it for these lows here. Now the second, which is most likely in this given time, is just going to be continuation of this higher time frame retracement to the upside for the dollar index. Okay, so you can see we're quite clearly shown intent to push prices higher, aligning nicely with our 10-year government bonds. So may actually just see our push up, we'll get our daily fair value gap left behind, see the retracement back into the daily fair value gap here, and then we'll close high. Just store an equilibrium within the markets, and we've actually got to observe the overall magnitude of this leg that's been picked up upon, and then that will be the week. So one of two scenarios: either we see strong movement to the upside, start reacting off our higher time frame parameters, clear low of the week will potentially be in, and then we'll make a run for some of our buy side liquidity. Potentially this 4 hour value gap here, may even make a run for these highs, etc. Then obviously, as mentioned, the other scenario may get our new drivers manipulation to the upside and see that continuation of prices. So it's going to be important, to let our Monday actually pass. Observe where prices are at, where it's likely going to trade, and which is the likely days we're going to be looking to take advantage of a trade. I'll update this in the Telegram as we obviously go on, but as of now, as mentioned, Tuesday, this is where we can get that intraday trade completing our framework. For a GU, see of those actually be taken. Very similar line with the dollar index. It could potentially make it quite early for this gap here, and make a run for this premium of the on the dollar index as a whole. So, thank you very much for listening. If you did make it this far, I'm going to be making a more informed and precise outlook once Monday is actually passed. I'm also going to be highlighting as well how market participants choose to trade G at the time. And thank you very much again, if you did make it